Before we get into it, if you enjoyed these videos, please hit the like and subscribe button, and keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as, investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that.
All right, folks, here we are on Thursday, February 13th. We're going to take a look at HIMS today. So HIMS has been on an absolute tear. Last time we had plotted some levels up here into the 50s. I believe I redid those today to account for the stretching to and through the levels that we had already put on. So here you see level up to 59.63, it falling just short of that at the high today of 59.55. So what just a crazy run. I mean, I don't know if this is primarily driven by reaction from the Super Bowl ad and then sort of an increased interest in HIMS and what they're doing and how they're sort of positioning themselves to disrupt the pharmaceutical industry. I don't know, but this is tremendous. I mean, even you look back here at the end of 2023, so granted, quite a long time ago, but a bit over a year ago, it was 565. So, I mean, it's not quite in Palantir territory yet, but I mean, this has just a crazy vibe to it. So, kudos for the HIMS bulls. These are the levels. If we zoom in, you can see how well it's been respecting these levels. Building off of this 39.27, came down there and then, struggled a bit with this 44.07, right? We see this sometimes in these very volatile stocks making very big moves suddenly, coming up and sort of skipping a level, right? It kind of breezed right through it, but then immediately starts pushing back to it and flipped it to resistance, actually, and then continued to wrestle with it. It ended up to be a little bit of those like magnetic levels that I used to talk about, 44.07, and ultimately left it behind, worked itself through this 47.05 level, and then it did zoom through 49.45 for the time being at least. So maybe just keep that in mind, 49.45. If there is some sort of a downturn, whether it's a downturn particular to just exhaustion from the bulls, whether it's something particular to HIMS, some catalyst, some news, something comes out, or the macro forces. Keep in mind that even if something looks great, if we do get a bigger turn in the market to the downside, something that has risen so dramatically may, not definitely, but may feel a big brunt of the pullback. So, and I only say that just to say, it did zoom through this 49.45 level. It doesn't have to come down and do anything with it at all. But if it were to have a larger pullback, that's maybe a level that I would look at for it to come down and sort of repopulate some volume in that range before carrying on. And whether that means carrying on further to the downside or sort of giving a nice dip buy opportunity and then a bounce to the upside. So those are the levels that I have. I think as we get through this 59.63, if that's the next step here, it'll uncover some levels that we just can't see yet on the chart. So we can always stretch more to the upside. If folks are interested, I'd be happy to do that. Just let me know in the comments, or leave a comment in the future when things sort of get into that range. Now, EMAs wise, just a tremendous push off of this 183 EMA. It's what we look for all the time. One of my favorite setups is the approach to the 183 and then on the recapture, sort of taking advantage of that. That would have happened back here, off of that 565 actually that we are talking about. But these bullish crossovers that you see on the short-term EMA with a stock price that's within shooting range of the 183, and then as those crossovers happen, just letting it go to work. Sometimes it fails, but this is a prime example of it just having an absolute liftoff, rocket ship liftoff from that. Even here, when it dipped down below the 183, it was already well over double the low that it was at when it started the run that got it, that initial push through 183. So even at that point, things still just looking tremendously good. Now, obviously, everything is in a bullish formation at the moment. 183 situated, or I'm sorry, the 183, the 8 EMA situated down here in the 45. So that'll get, continuously dragged up, and we'll see what happens when it re-engages. But of interest, it did get quite dippy here It's a couple of bearish crossovers, the 8 crossing below the 21, then below the 34. You never got, I don't think, the 21 crossing below the 34. So that's why that's a good sort of indicator, because you may have sold out here, which wouldn't have been horrific, right? But you could have just stayed in or even dip bought this if you were sort of really risky business. Because the 21, this peach colored EMA, was not crossing below the red, even though the white one was, right? So sort of like the 8 crossing over in a bearish formation, sort of saying like, hey, pay attention to me, but the 21 not doing the crossover. I think the closest they got, they were sort of laying on top of each other at some point here, it looks like, but that just gave breadth to the next run. And then when it's been engaging with the EMAs, it's been, pretty securely hopping off of support from the 8 EMAs. That's exactly what you'd want to see in a stock that is just primed for additional bullish momentum that would need to be exhausted before it did anything else, like take a bigger breath or have some more significant pullback or something to sort of restructure itself now that it's in a new strata of price points. But yeah, really good motion there. So we'll see if it continues to bounce off the 8 EMA is my point. And that could again signal that, yeah, even though it's gone through this crazy run, there may still be more in the tank if it continues to bounce off that 8 EMA. That would be a good sign there. If it does get dippy, that's where you might want to look for. If you think the overall picture is rosy, you might want to look for a good dip buying opportunities, which can be very tricky. But something like this, maybe something to keep your eye on, something where the 8 is crossing below the 21 and the 34, but the 21 never crosses below the 34. And then if the price starts to reverse, that might be a really good opportunity. It might go against you. And so you might have to stick to a very strict trading plan to not lose the dues. I don't have a good rhyme there, but to not lose your rear end. You might have to really stick to a trading plan there. But such is dip buying. It's a precarious endeavor. Now, volume-wise, as you would imagine, pretty thin volume up here, just putting in like a day's worth of action. But, a lot of the like significant shelving right now situated all the way down in the 30s, which, again, it doesn't necessarily have to mean much of anything, but just something to I think, continue to keep an eye on, because if the price is going to stay up here, obviously there was a huge surge in volume today, as you can see here, but it's going to need to continue to put in that leveling in terms of volume shelves up here to help sort of stabilize the price into that range and not sort of have these very thin zones that have a $10 or $20 drop in order to get to a shelf. At least for my money, I would feel more secure in that situation. Short interest. I know this was actually what sort of piqued my interest today. There was a pretty steady and strong uptick into the new year of shorts, kind of piling in pretty strong. That said, I did look on our iBorrow desk, and from what I can tell, the most recent data, it looks like there's still millions and millions of shares to borrow. So it doesn't appear to me that the shorts are hyper over leveraged yet. Who knows what takes shape like after today, right? They might really see an opportunity to try to jump in and plummet it. I don't know. We'll see. But the fee was also like a decimal point, right? It's like 0.3% to borrow or something. So definitely in terms of shorts, I think it's something worth keeping an eye on. This would sort of be their MO, would be to see this surge like this. And we see that they have been steadily increasing basically over the course of the last year, right? From February until today. And so I would maybe keep an eye on it. And they are holding quite a while, right? So if that fee starts to creep up, that'll make it incredibly difficult for them to continue to hold for several days, especially if the price continues to go against them. And I'd want to see that available shares dip. Like I said, it's well into the millions now. I think the last time I checked it was 5 million something. I would want to see that dwindle significantly, like into the hundreds of thousands or even less. So then it becomes very hard to borrow shares. They're holding on for way too long with a price that's going against them and paying a very high fee to do so. That then really gets you primed for, who knows, maybe it ends up sort of like gamma squeeze territory. Maybe it ends up sort of more traditional short squeeze, but those are hard to effectuate. But it did pop into my mind today. I wonder what the shorts are doing here, because this is quite a story to behold at the moment, and that's often seems like where they're wanting to come in, right? Yeah, so something to maybe keep an eye on, but that fee would need to move significantly, and like I said, there seem to be a decent amount of shares left to borrow, so it doesn't seem to me at the moment, at least, even though this is on the uptick, it doesn't seem to me that they're like wildly outpacing the buyers at the moment, right? Shorts just absolutely piling in and borrowing up every available share. So we'll see if that continues to be the case or not. Insiders, I thought this was also kind of interesting, and even with info coming in just 3 days old or so, not really folks buying on the inside. I know you have like a blip here and there, no tremendous sells, right? You're not seeing hundreds and hundreds of thousands or more like stocks being unloaded, but there's solid double digits in spots. Not to say that there's anything wrong with that, to quote Seinfeld, but I did think it was interesting. And at this point, they might certainly feel like, oh, I'm not going to participate in my insider buying now that it's up to like 60. Maybe I'll wait for another period. But it would be interesting to see if the insider activity does pick up from a buying perspective, like what range that happens in. So maybe something to at least keep your eye on. Obviously, at the moment, per Webull data at least, and they haven't updated this today, but as of close yesterday, 100% of shares were profitable. So I do again start to wonder, where's the additional buying volume going to come in? Are people going to be dollar cost averaging up? Now, a bunch of this volume is up here, right? So they wouldn't be averaging up like a shockingly high amount, like folks who are profiting from being in down here. But I do wonder, are institutions going to come in? That's the other thing to maybe keep an eye on. Obviously some large scale orders coming in the last several days, some coming out also. But that does become a question to me over time. Where's the volume going to come from? We'll see. But again, something maybe to just have in the back of your mind. And to me, watching what the shorts are doing, if anything, maybe they won't do anything, and watching what the insiders do, that's of particular note in this situation to me. So very quick on the thinkorswim side of things, because we're well out of the ATR levels. At the moment, at least, as it's situated, the March ATR levels, the +1 would stretch all the way up to $66.61. The -1, if it were to draw down, would be down at $51.75. So all feeling like it's well within range, right? Either of those numbers feel like they're within range, being how HIMS is moving at the moment. But also just a nod that this trigger and fire by the TTM squeeze indicator was absolute bank. It called it out, and that was a tremendous move. Great motion there. You could have easily doubled your share price if you had hopped in there and stuck it through this run. There wasn't really a lot of shocking, like super concerning moments probably if you jumped in like here, right? It was just kind of ride it. But yeah, really, really good motion there. So obviously nothing re-triggering or anything at the moment yet, still playing out the extent of that last trigger and fire. All right, folks, so I hope that your trading week has been going well. And as always, I appreciate you watching, and I will see you in the next video.